Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On the show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions to smaller deals that you can do even without significant capital. My name is Corey Kupfer, and I've been supporting deal-driven growth for businesses for 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the Deal Quest podcast. Let's get started. Ace Chapman has been in private equity for over 20 years. The first business he bought was an online stock market simulator in the early days of the internet. He purchased the website, made some changes, and grew it from 10,000 to 250,000 users and generated a 100x cash-on-cash return. Since that initial acquisition, Ace has built systems around building private equity funds, completing close to 200 deals. He has served as a general partner for 8 funds. His process, experience, and insight into private equity are among the reasons that the majority of his partners return fund after fund. Ace, welcome to the Deal Quest podcast.
It is great to be here with you, sir.
Man, so listen, folks, Ace and I met at a Deal Exchange conference. That was a lot of fun. He presented, and you know, as somebody who talks about the mindset of a deal maker and what makes people deal makers, and you know that whole distinction, and as an advocate for deal-driven growth and non-organic growth, like this guy could be the poster, the poster guy for that philosophy. Because I was sitting in his session, I'm like, yes. We agree. But before we get to all that and talk about a little more of your great story and the deals you do, and I want to take you back to when you were a little kid growing up, maybe 8, 10, 12 years old. Ace, what did you want to be? Because my guess is a serial, entrepreneur acquirer might not have been it, but you tell me.
Well, going back, to a young kid, I grew up, my dad was a pastor, and when we would go out, I had a fascination, I guess, with being wealthy as a kid, because he was not a wealthy pastor. He was a pastor of a small church, and was an amazing man, and gave if we had anything, he was giving it to somebody else. And so, I can only imagine how much he would cringe when anybody would ask me what I wanted to be when I grew up, because my answer was rich. And they would try to dig in and ask me like, well, no, like that's great, but what do you want to do? You want to be like an attorney? You want to be a doctor? And I'm like, nah, none of that. I'll just be rich. I think I'll just do that instead. And I had seen these TV shows, back in the day in the 80s, you just had these kind of TV shows. You might have like a Miami Vice, whatever, and you would just see a guy and he's just rich, and he goes, right. It's like, it's not working. It's not a doctor. He's just rich. So that was my plan, but my poor parents had to suffer through that. And like, well, you got to come up with something that you want to be. I was like, I've already come up with it.
Right. That's it. It's rich. I love it. All right, looking back, and maybe this is the one in your bio, maybe there's something before. I know that was your first M&A deal that we discussed in the bio, but what was your first deal of any type? But looking back, could be something when you were younger, or maybe it was that deal. What comes to mind?
So, I was obviously having that kind of mindset. I was obviously the kid that was buying candy and selling that. Sure. Finding the cool pencils and selling that. But I actually had a little business that was pretty neat in high school that ended up making me the money. In that first deal that you mentioned, I had about $3,000 saved that I had put down on this business. And that $3,000 came from a business where I would sell these gold necklaces. So I was in a store that, just had these, like, they were not actual gold,
right?
But they looked really cool, and they said 14 karat gold. It didn't say like gold plated or anything.
Okay.
And so, basically they were like $1. And so I would sell these things for $14 or $20 And, it's obvious. It was like, hey, like it says 14 karat. I don't think it's real. It's probably not real. And it was just so many business lessons from that first experience. The first one was like the power of like franchising, basically. So, I was at a school and then I had friends that went to other schools. And so I came up with a plan where I would, sell it to them wholesale at like $8 and then they could go and sell it for 15, 20, whatever.
Well, listen, when your cost of acquisition of goods is $1 and you could sell it retail for 14, there's a lot of margin in there, a lot of room.
A lot of margin. So, so at my school, people would do ridiculous things. Like they would go swimming with the necklace. I'm like, you paid $20 for this necklace and you thought you could go swimming in it. But when they came back to me with their net green and the necklace, it's like, here's another one. I won't make you pay anything for it. So it's free, but don't do that again.
Right.
My other people though, I had one guy in particular, and this is where I learned, like, as you start to sell to other people, the issues that come up, he didn't have that. He didn't want to give up anything. And he was obviously paying a wholesale for the necklace.
So he had less margin. Right.
So people would come back to him and they're like, hey, I don't know. You got to call this Ace Chapman guy. And this is back in the day with like pagers. So he's giving my pager number out to people. They're blowing me up bad. He's telling them that it's real for $20. And so I'm just like, I had no quality control over the process. So I made some really great money, but had to shut that business down. I didn't want people coming after me for the fake gold necklaces.
I love it. So then you said you took 3. I definitely, this is a story you told when at the conference we met at. Yeah, I really want to hear. Tell the audience the story of this first business and the $3,000 and how you got that first deal done.
Yeah. So while I was in college, so I actually made a bit of a shift and wanted to study political science because I as funny as I didn't want to be an attorney at all when I was young. As I got older, it's like, okay, well, that would be a cool career path. While I was there, though, I was really interested in business as well. And so I was playing this stock market simulator game called Cool Wall Street. And the frustrating thing about it was, number one, there weren't a lot of options back then. This is like 1999 for games and just things like that. But the site was always crashing. There were just always issues. They had a forum on the site and the whole forum was just basically complaints and talking about the admins never responded. And then they didn't even respond to that in their own forum. So I reached out to them because I felt like the business had so much potential and they were just like throwing it away. So I reached out and I'm like, hey, I'll come and intern for y'all for free this summer, help you build this thing into what it could be and, just do it as an intern. And eventually, they still took a long time to write back. They wrote back and said, we're not looking for interns. We want to get rid of this business. We want to sell it to somebody. We've moved on to another project that, basically they were more excited about. And they basically made me an offer. So their offer to me was, you go and find somebody who will buy the business from us, and then you can intern for them.
For that, right.
And I'm thinking, why in the world would I go find you a buyer so I can have a free job? Like that makes no sense. So I did not like that offer, but I was curious about the business. I ended up reaching out, asking them if, as a 19-year-old kid, I'm coming across people who want to buy businesses all the time. Send me the information. They were making about $60,000. They wanted $70,000 for the business. I tell people I had no idea about valuations, but what I did know was, at Colgate University, people were paying $140,000 over 4 years, and a lot of people were getting a job, making $40,000. And so that seemed like a really great comp. So $60,000 for $70,000, and I get to own this business. But it didn't matter because, like we talked about, I had $3,000 to my name. And I ended up getting that first deal, which, basically was my first kind of leverage buyout, where I, unbeknownst to my parents, took out some credit cards and converted some of that into cash. You get these checks back in the day.
Oh, sure.
We were reminiscing that, when you walk around the campus back in the day, they had what would be totally predatory today, had these companies that are basically just credit card companies, and they're giving you a T-shirt in exchange for you signing up for these credit cards. Yep. So I had ignored them until I needed that money. So that worked out. That got me, about $11,000 between 3 different cards. And then I had an investor who was wanting to put in, and they financed the rest of it. And so I was able to buy that business for $70,000 at 19. And that really just changed the course of my life. Thank goodness I didn't continue with the political science.
Well, and who was the investor? How'd you get an investor at 19?
Oh, that's a really great question. So I had a great buddy of mine, and I'm telling him about this deal, not thinking that he has any money, but I'm saying like, man, like they've agreed to finance 35. I've got like about 15. I got this difference. I got to figure out like how I'm gonna do it. And I don't know where to go to get the money. And he's like, I got the money. I'm like, what? Like, where did you get the money? And he's like, I got it for my bar mitzvah. Which at that point, I didn't know what a bar mitzvah was, but I was trying to get one.
Love it.
I wanted one. And so, yeah, he took a portion of his bar mitzvah money and invested. And that was really cool because he saw the same thing. He was studying. For him, it was really cool as well because he was a programmer. So he was going to school for programming. And so not only, and it gets into what we're going to be talking about today, it's like growth through deal making. Not only does he come in and he's an investor, but he had a motivated interest in getting the site right. And I knew nothing about programming. So it was just a win-win. So that was one of the things I was kind of talking about. I was like, oh, if I do this deal, like, would you be interested in working on it? He's like, not only will I be interested in working, I'll invest. So it's just a very cool win-win. Really, 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 really awesome.
I love it. So $3,000 in cash, 11, 12 grand in credit card cash advances, seller financing of 35K, and then another 20K or whatever the math is, 21K from your buddy, and you finance the deal. So talk to us about what happens. So you buy it, and then the bio gave the high level, but talk to us about that journey, and then what exactly, and then what eventually happened with that business.
Yeah. So I get the business. I'm in the dorm room. I'm working on this thing, and there's just a lot of low hanging fruit. The first one was actually responding to the customer emails.
What a concept.
It was really great because the expectation level was so low. It was so outrageously low that just responding, people were just like, oh my goodness, it's the greatest ever. I love this. The form completely changed. And so it was great. Like, that's why I love that to this day, just get the businesses. They're making money in spite of itself.
Yeah.
So that initial growth, like people started to refer, we started to get some initial just referral growth. And I get to the point where I need to hire people, and I have some people that want to invest in the business. So over the course of that summer, I'm working on the business. My parents are basically telling me, like, you have got to get like a job. Like, you need to be working on something where, it's going to help you find a job when you get out of school. Like, you should be doing something in your field. What is this internet thing? And I'm like, no, I'm like making money. It's like, well, even if you're making money, you gotta, you should be doing something in law. So I'm dealing with them kind of, coming after me all summer as I'm working on this thing. And then when you get towards the end of the summer, I've got these investors that want to invest in the business. And I go to my dad and I'm like, I got these people want to invest in the business, but they're telling me they don't want me to go. If I go back to school, they want me to be doing it full time. And I'm thinking, like, I don't know if I should take off a year. I really don't know what to do. And he's like, why would anybody want to invest in this business? Now, you got to think this is like 99. So the internet and all this stuff is just really new. Yep. And he's just like, why would somebody want to invest in this website thing? And he's like, I'm like, to just making money. It's like, is it making like real money or just internet money? Because it was a stock market simulator with fake money. Right. So he's thinking, I'm just making this fake money. I'm like, no, Dad, it's like real money. And I had a check.
And you're not talking about crypto because this is way before crypto.
Exactly. My dad could have invented crypto. He came up with the idea first. He's like, no, you're just making that internet money. Could have been billionaires. So I had a check. It was from DoubleClick, which eventually is like now what we know as AdSense and AdWords was bought by Google.
Yep.
So it's this DoubleClick, and I had this check from them. And, number one, the name was DoubleClick, which is what you do on the mouse. And my dad's like, DoubleClick, this thing is a scam. Secondly, the logo was kind of cartoony. He's like, this isn't real. And it was like a $5,000 checkout receipt from them. It's like, we have got to go down to the bank right now. You've been depositing these checks all this time. Like, you're involved in some kind of scam. These random people off of the internet. Do you know these people? Have you ever, like, we're going back to the old days of like doing business in the old way. And so from his perspective, it's like, you're getting checks in the mail from people called DoubleClick that you've never met in your life. They don't know you, and they're in some other place. Like, why would they do that? And you're a 19-year-old kid. So we get down to the bank, and he goes up to the teller, like, listen, I need to just inform y'all there's some scam that my son has been getting these checks. Can you go back there and call the other bank and just like get this settled? And she looks out at it and also agrees. Oh my God, yes. DoubleClick, cartoon company. This thing is totally fake. She goes to the back, comes out, and I'm sure like her face said it all. Like they're probably like a $500 million company at that point. It's real. And she comes out. It's like, yeah, like it's definitely real. All the checks are good. And, we get in the car, and this is from like my dad, who had just been staunch, like, you need to be focused on school. You need to be focused on the long-term career, blah, blah. We get in the car. He like looks at me. He's like, why are you even considering going back to school? So that was the vote and push that I needed. And so I ended up raising that capital and running the business, and just, at a young age, got the good fortune of being able to build a team and understand financials and reporting to investors and just doing board meetings, just a lot of things that I look back now, which, I'm sure I was just a clueless kid, kind of figuring things out. But it was just so many great lessons. That business, after the dot-com boom in 2001, ended up all our customers, all of our advertisers basically went out of business. So DoubleClick was the ad agency.
Yeah, the bust. Yeah.
All of them just went out. And so eventually we just petered out. And so here I was completely devastated. I didn't have a degree. I, didn't know what I was going to do. I lost the business. And, even for me at that point, I felt like it was just this luck thing of like finding a business that happened to be for sale. I didn't know anything about buying and selling businesses. And I was talking to a friend about just like, I bought this business and da-da-da. And now it's going out of business. I don't know what I'm going to do next. And he's like, you should meet this other guy. He does something like that. And he's an older guy, and he like makes an introduction. And so I'm talking to him, and I'm like, yeah, like Eric says that you do something, like we do something similar. And I was like, what do you do? And he was like, well, I flip hospitals. And I was like, yeah, we do nothing. So like there's no comparison between what I did and what you're doing. But I got to spend some time with him. And one of the greatest, just first conversation lessons from Dr. Mike Aiken was that he, was asking about this business. I'm just like kind of down and, the business without a business. My view at that point was that entrepreneurship or business ownership, if you're going to be successful, was Steve Jobs, Bill Gates, Larry Ellison. You have one thing, you're going to grow it for your life. You're going to take it public or something. And that is how success works in business.
Right.
And so he's asked me about this thing. I'm like, I was a complete failure, blah, blah, blah. And he was like, okay, so like, how much did you put into the business? When you did, it started like $3,000. And it was like, okay. And then over the last 3 years, like, what have you personally taken out of the business? Yeah. It's like, well, with the salary and then the distributions, whatever, it was a little over 300,000. He's like, that was a success. Just go do that again. And it was just funny, like this paradigm shift where it was like, wow, like I'd never even considered it that way. It's like you did 100x return. I dream of that. Like I dream of ever having something like that.
Yeah.
And so that like initial conversation as well as like some ongoing conversation was the thing that like changed my life from there.
Yeah, and it's interesting because I'm gonna sort of go to I'm not saying the end, but like the thing that impressed me about you when I saw you talk at the conference was that I always talk about the mindset of a deal maker, right? There's the mindset of an entrepreneur, which is different than the mindset of an employee, right? But then there's something also different because you can be a successful entrepreneur without doing deals. You can be great at sales, organic growth, right? Whatever, and you could, but the whole premise of this podcast is that, hey, there's this other good thing you could be doing as well, which is called deal-driven growth, even if you're great at organic growth. But you are like deals first in mentality, right?
Yeah.
In fact, I remember you said something at that talk about, every aspect on, every expense on your P&L, right? You look to own, right? And I'm not saying you do that at every, but that's the mentality,
the
right?
goal. That should be the goal.
Yeah, that should be the goal, right? So why don't let's sort of bookend this. We got the starting story. So let's talk about now and that philosophy and sort of how that is practically applied, because that's a very different mindset than even people who do deals for very specific purposes. Like you're really, in my mind, like you think deal first.
Yeah. I think that everything basically should be a deal. So part of that, is they're basically kind of these three different segments of that philosophy. So the first part is what you mentioned, the P&L strategy. So I'm looking at everything in my expense column and I'm trying to figure out, how do I keep that within kind of my holding company? So quick example of that's one of the more simple ones is, we had a holding company that had, several businesses up under it. We realized, hey, we've got a lot of costs when it comes to bookkeeping. So we bought a very small bookkeeping company. They only had 10 clients. We added, our 5 clients to it that also had, quite a bit of work to it, which essentially, because of the amount of work we had, doubled the size of this business. And so when you are kind of thinking about this way, it's like, if you can buy something, in that case, we did get it at a 1.5 multiple, but if you get to buy it at a 2 multiple and you instantly take that part of your P&L and put it into this business, so now it's not going out. I wanted the other part of this P&L is that I'm just trying to keep everything within my businesses because this is a dollar amount. And so that the dollars that we take off of our expense and put into this business is now multiplied by a 3 multiple. And by putting that into this business, we've doubled the size of that business. So we're buying it at a 1 multiple or a 0.75 multiple, and we're adding these dollars that we before was just an expense, and we're turning it into a 3 multiple. The second part of this is that somebody's already built everything. And so it's just the concept that, if we're looking at, hey, we need this talent. So one of the deals that we're working on literally right now is a VA company. So in one of our businesses, a big headache in that business is we're always having to hire or place VAs and train them when they come in and get them kind of the basic skill sets, blah, blah. So that was a big expense and a big headache in our business. So we found this business that is basically for sale, and it's making about $16,000 net a month. And they're already in the business of finding the VAs, which can be worked to get the high qualities, training them. They send some of those other people. But now, instead of us trying to build and systemize the VA hiring, training, HR, development, just all of that stuff, they've got all of that, and we can get paid to own it. And so that becomes just like, if you're looking to hire, if you're looking for talent, there's somebody else that already has that. You can get paid to get those people. And then the last part is your actual growth. So a lot of people talk about growth from the standpoint of, I want to go buy a business and that income is going to come into my business, and now I'm growing through acquisition. And one of the things that most people don't consider is the fact that 45% of large businesses, 45% of their growth, 45% of all large businesses have their growth come from acquisition. Yep. So 45% of the growth is from acquisitions. So if you're not doing acquisitions, then you're missing out on basically half of your potential growth. And a lot of small businesses think, oh, well, great. Like when I get to be a big business, I'll do that too. What they don't realize, no, they start that early.
That's how you get to be.
And that's how you get there.
Right.
So that's one part of growth that should definitely be there. But the bigger part of growth is looking at your actual growth channels. So, one of the businesses that we had last year was in the art space. We basically were spending a lot of money for this art course and the products and driving traffic. We realized, okay, there are all of these Facebook groups that are talking about art, they're talking about this specific type of art, we can go and buy those businesses, those groups, which in a lot of cases weren't generating any money, but they have our target audience. We can buy those, and then at least we own something. And we didn't know that how great it was going to be, but it was a business where we're spending about $20,000 a month, and we could buy these little groups with 100,000, 200,000 people. We spent $5,000 on those. And there was one group in particular where we basically bought it, had 100,000 people that were in the group. We end up basically replacing most of our traffic that we were getting by spending all of that money. But then the other cool thing is we were able to find some advertisers and sponsors. One was a framing company that ended up being some other interesting aspects of that deal. But and like obviously these artists, they need frames, and so we partnered with them, and that became income. So we went from spending $20,000 to get traffic and basically transformed that process by buying these groups into making a net of about $3,000 that we're getting paid. So it's like, instead of us having that expense, and I look at now, like I look at even advertising, like I just can't bring myself to do advertising. Like if we're in a business, like we we're trying to figure out, how do we own the media? How can we just go buy that media? Because anytime you're advertising, you're renting access to that audience. Every month you got to rent access to that audience, and again, you got to do it. And so I want to be able to buy the media where that audience is over renting access to it.
Yeah, really makes sense. Let's take a break from the show for a minute so I can invite you to a new way to determine your deal readiness. I created a fast and easy assessment that will determine exactly how deal ready you are. Once you complete the assessment, I use your responses to identify the obstacles that are holding you back from being a deal-driven growth genius. It's as easy as heading to CoreyKupfer.com/assessment. That's CoreyKupfer.com/assessment and filling out a few multiple choice questions. I'll be checking in after the episode to see what your results are. Now back to the show. So I'm sitting there thinking, okay, what would be some of the potential issues or concerns about this approach that people would think about? And obviously, because there's obvious benefits, right? I love the idea of turning expense into profit. I love the idea of, of having things integrated. I love the idea of having more control. And at the same time now, though, you are, and when I say running, obviously you're buying businesses with people in there that are operating. So you're not operating day to day, but you still have oversight of a very disparate types of businesses, right? And that, in theory, can cause issues, right? Maybe, it's just, you got more people, you got different types of business, different systems, different economic conditions that can affect it, all that kind of stuff. So how do you address those potential issues in something, because there are philosophies out there that are very different. And listen, the bottom line answer is that certain things work for certain people, right? But some people would say, hey, we might vertically integrate some of the supply chain. We're going to stay in our niche on what we know. We're going to hire out these other experts, but you take a very different approach to that, and there's no right or wrong. How do you deal with the fact that you have so many disparate businesses?
Yeah, a couple of things that are really important. And a lot of these deals, we don't even buy majority of the business. Mm-hmm. So in some cases, we're coming in and we want to be able to benefit from the ownership, but we may not buy the whole business. And so either that previous owner still owns it and they see the benefit. Like we can sell a seller on, hey, if you hold on to this for another year, we both win. We're going to take our clients, we're going to put them into this bookkeeping company, and, like now just hold on to that for another year and you're going to get a bigger exit and we get a piece of that.
Yes.
So, you have deals like that. You have other things like even within just the bookkeeping space. I was speaking to a group and was talking about that deal in particular, and an accountant comes up to me afterwards and he's like, so like there are people that will buy like a 10 client bookkeeping business. I was like, yeah, like, obviously depending on the income, like definitely. He was like, man, like I turn away every month 20 to 30 clients just because we don't want to take on new clients in my CPA firm.
Yeah.
And, it was like he reached into my heart and just got, it's like, you're just throwing away money. And so in that case, we're literally just packaging businesses with him now. So we just are finding a person that's going to do the bookkeeping a lot of times overseas. He has the clients coming in. We package that with 10, 15 clients, and then we just exit out of that. So part of this, and this is where even what you said becomes the short answer is most people are still just buying business. So they're buying business and thinking about, okay, I'm going to run this forever.
Yes.
And that's where you start to get into just some headaches. You're trying to deal with just long-term issues. But I just am of the belief that the only reason you own a business is to exit. Like if you're in a business that you can't exit, you're just in a job. The only difference between a job and a business is that the business is a sellable asset.
Yes.
So, for folks that just are like self-employed, it's like, hey, that's great. You got a job. But the goal of everything we do in every business is the only reason that we're doing the deal is for a exit focused reason. So we're increasing the enterprise value of this business by having this bolt on. We're creating an asset out of thin air by taking our expenses and putting that into another business. With each one of these things, like when we think about a group, we don't just take that group and save the 20,000. Even if it's just $3,000 a month, that becomes a $30,000 business. That's a 6-figure asset that at any point we can exit in and of itself. So everything is about the exit. And so it becomes a little bit easier to manage because we're always kind of turning it over. It's not like now we've got to come up with a plan of how we're going to run this business for the next 5-10 years.
Yeah. No, that totally makes sense. Yeah, and it does eliminate a lot of the issues. And obviously you bring the skill sets and the smarts to increase the enterprise value in a short period of time. And then you can resell it, which is great. So you've done a couple hundred deals, obviously.
184 yesterday.
How much?
184.
184. Okay, 184 deals. All right. So I have not met even a highly successful deal maker who is batting 100%.
No.
Right. I mean, in fact, you don't even need to bat close to 100% to be successful. So let's talk about an example or two where the deal didn't go well. Because listen, you've done 184 deals. Clearly, most of them go really well. You've done very, very well. That's a given. But we often learn the most from the ones that go bad. So give us a couple of examples of ones that went bad and the lessons you learned from them.
Yeah. So one of the ones that was a pretty bad deal that just was like the worst, where it's one of the worst scenarios you can have, you're aware of. I was doing a roll-up of some spas and tanning salons. And, I basically had put together 5. I didn't dream of being a lifelong.
Excuse me. Yeah, keep going.
No worries. I didn't dream of being a lifelong tanning salon owner.
Right.
So again, the plan was I'm going to put these 5, a few of these together and sell them. So we reached out to a lot of spas and salons, and just a lot of people turned down the offers, blah, blah. So I've got these 5, we've rebranded. We've got a buyer that's about to buy those 5. And one of the people that we had reached out to before reaches out to us and say, hey, that deal you offered me a while back, like I'm willing to take it now. And this is months and months later. And I'm like, yeah, that offer just isn't even on the table anymore. We're about to sell these. Like it would be a very low offer. It'd be a lower offer now. And so the guy basically is like, hey, all right, well, just come down to my house and we'll talk. And I'm like, all right. I go down to his house out in the middle of nowhere, first of all. And I get down there and, we're eating dinner. I meet the family. And I guess maybe he thought, I'm going to butter them up, let them see these kids who want to need this money. And so we get to the end of dinner and he's like, all right, so tell me your offer. And I tell him the offer and, he's quiet. I'm eating. I'm like, okay, he's going to play the negotiating game. Whoever says the first word, that look. So I'm sitting there. It's like, I'll just wait, see if he says anything. Then I'll look up and he's turning beet red. And I realize like, oh, this guy is angry. And I'm like, oh my God, like I'm out here. I'm in the middle of nowhere. And he just like burst into curse words, choice things that really boiled down to, you came into my house and insult me with this. I'm like, I didn't want to come to your house, man.
Right, at all.
At all. And I didn't even really want the business. Like I'm about to sell. So I get out of the house. I'm like, yeah, great. I don't even want the business. Anyway, cool. So maybe a week later, his wife number pops up. I'm like, why is she calling? And she calls like, I'm just wanting to apologize or blah. I'm like, no need. I understand. Like, it's all good. And then she's like, so we'll take that offer that you made us. And I'm like, no, like that offer is off the table as well now. And she's like, well, just tell us what you would do it. And I'll take care of it. Just tell me what you would want to buy it for. And I come back and it's just even lower, just really at that point, just to say, hey, don't sell the business. And, she was really motivated to sell. She was kind of in the business and wanted to get out and da-da-da. And so they agreed to accept it. And so get to closing. I have to close. I go back to my buyers, tell them, hey, I've got this other deal. We're going to add it in. It's going to be a really great payday for me because I'm getting it so low, and they agreed to still buy it at a 2 multiple, which was still a discount, but it was just so low that it was a cool deal for me. So I'm going to buy it, and then I'm flipping it to them. I close my portion, go down to the business like the next day. I walk in, and it's like the manager's seen a ghost. It's like, hey, have you seen the email? I'm like what email? You're talking about the email blast that went out. And it's like, no, I'm not on the email list. And she was like, you need to see the email. And I can still like see her face. She was just like, you need to go see this email. So I sit down and I'm reading the email in the back office. And it was basically the owner. He sent out an email blast to all the customers and basically said, hey, we sell the business and we got to tell you this to this guy named Ace Chapman. They should call him the Ace Hole because he was just a terrible person. You should not come to the business anymore. It just goes on this big rant. I'm just like, what in the world? So just like grenade bombs the business, essentially. The first time I had ever experienced anything like that. And 2 things came from that. Number one, I'm like devastated. I'm like, oh my, what a pain. Like I just paid, I lost this money, blah, blah, blah. I go through, I realize like, okay, we've got like 21 beds, we've got these assets in here. I go to my buyers. I may say, hey, that business is off the table. I'm not going to sell it to you, but I've got these beds you can put in the storage unit and just have as backup beds. You want to pay this price, and still was able to eke out a $10,000 little profit. Wasn't my 6-figure that I thought I was going to get, but that was like a cool lesson. Like if you do get a rock bottom, then it can still work out. But the big lesson from that, and this is something that I literally still do, that was like such a big lesson, especially when there's any kind of tension. I always make the seller say that they're happy with the deal. Because a lot of times they may not be all the way, but I'm like, hey, like I'm not going to close this deal if you're not happy with it. So even if they're not happy, it's like you're going to tell me you're happy, and now you're almost breaking your own word if you go back and there's some kind of issue later. It's like I'm not closing this deal until you say I am happy with this deal.
Yeah, it's interesting. I guess on the structure of that deal, it was such a small amount that it was just all a lump sum. There was no back end money that he had at risk.
That's the other big lesson. The other big lesson is even if you got the cash, whatever, having even just a little split. Like if we're doing a small deal, I'll still at the very least just have, if it's a $100,000 deal, all right, I'm gonna pay $50,000 right now and then $50,000 in 90 days. So that gives you, and it was in that case, like that is even back then something that I would normally do, but it was just a weird thing where I was selling it. And so I couldn't really have the debt out there and it was coming. So it was a pain, but now I definitely stick to, it's like, okay, I'm not doing the deal if we can't stick to these known rules, man. It's when you break your rules that you get in trouble. But that was a very heart-aching deal and just stressful and it still was just a pain. I had to close it. I had to fire people. The first, it didn't last a day. And from their perspective, it's like this black guy just came in, he buys the business, fires everybody, takes everything out. And it was an adventure. So yeah, even with the 10,000, it was not worth the headache. And at least I didn't lose money though.
Yeah, got it. Let's talk a little bit about the, sort of the deal market. Obviously you play in a number of different industries, right? Small business, medium business, small, medium business, end of the market. We've had certainly a boom time in the deal market generally at almost any industry, and all, pandemic affected industries, an exception in some ways, but not, because there were some, obviously there are deals even done in bad markets, down markets, opportunities that come up. But the point is the deal market overall, generally up and down the thing has been very, very robust as the economy has been strong in the last 10, 12 years before this last year, let's say. Plenty of capital out there and available, right? People looking to where they put their money because they're not getting any interest rates, right? Now things have started to shift, right? We've got interest rates going up so people can get better returns on safe investments. You got inflation, you got, some other economic headwinds, distribution issues, that kind of stuff. How are you seeing it affecting, if at all, the market in terms of deal volumes, in terms of valuations, in terms of structures, all that kind of stuff?
Yeah, there's just so many different deals. And then in each deal, they're like all of these, there's just so many factors, man. Like I think about some of the people, like I do a lot of internet businesses. And for a while, like the FBA businesses were really hot. And there were kind of these aggregators that raised hundreds of millions of dollars.
Just for any listeners who don't know what that is, explain FBA.
Fulfilled by Amazon. So, you look at like that category was like a category within the internet deals, and they just were buying these things like crazy. And, you see like where a shift from Amazon can affect the whole portfolio, and you just have like billions of dollars that can be affected. But I think as you look at like the overall just small under 5 million market, one of the things has been access to financing in order to buy businesses. So as that, what we've just seen, like as that interest rate goes up, the really cool thing is the money is still there. So deals are still getting closed, and it's just a really great opportunity if you're somebody who needs financing to be able to do SBA. What happens though is the affordability goes down.
Yeah, cost of capital is going up. So
the cost of capital is going up. So I would say that's one of the things just across all of the businesses. But we've seen, just in specific businesses where, whether it's Google changes, whether it's Facebook changes, everybody's getting traffic, even offline businesses now. You're getting traffic from the Googles and the Facebooks and doing Instagram posts and all those things. And so you can start to see as they change things, it changes things across the board. On the other side, I will say, we're looking at a portfolio. It seems like people are still doing well overall. And, going back to your other question, as far as like, even with our failures, like what I try to focus on is like the overall portfolio. So you're just going to have deals that don't do well. You're not taking enough risk if you don't have deals that don't do well.
That's right.
But if you can have a diversified portfolio, you've got some of those deals that are just going to be killer. And, I mentioned the bookkeeping thing has been amazing. I think one of the side effects that until one of the clients mentioned it, I didn't really think people were thinking about that. But I had a friend who basically came to me looking for bookkeeping. So I referred them to, now we've got, several bookkeeping companies because they're just killing it. And he was like, yeah, like the IRS just hired 80,000 people. And so I think for a lot of small business owners, they're like, oh, now is the time for me to like really be up on my numbers because the IRS is not playing. I think they got 30 billion or something in additional funding at 80,000, and they're combing and they're coming for their money. Yep. So trying to figure out, okay, based on these new markets, like where is the money going? And there's always some place that there's a trend to take advantage of.
Right. Listen, we can talk for hours about deals.
I feel like we just got to
and we have already, and we will continue to, but we can't do it for hours on the podcast. So I'll just ask you before I go to my final two questions, if there's anything else about, whether it's lessons, whether it's about the deal market, any cool deal you're working on, anything else you want to mention before we come to the close here.
Let's see. What cool deal? One of the things that I would encourage. So the thing that people aren't taking advantage of, that I think that should be taken advantage of, is crowdfunding. So one of the things that just across the board, we're getting just some amazing results from is when we go out and, we buy a business at a 3 multiple, and then we're able to take it to a crowdfunding platform. Like we've had a couple deals we're working on in the middle one right now, which is, I had a call right before this one, which is why it's got a top of mind, where, they had a valuation of about $300,000, and it's just a great product. It's consumer. They've got it patented. It is a very cool business. and we've got it approved on one of the platforms. We'll be able to raise capital at a $6 million valuation. One of the deals that I did at EO, the event that we met at, we did a similar thing where, we invested at a $450,000 valuation, and then it raised capital at a $5 million valuation on WeFunder. So you just have these like really, really cool things that you can take advantage of in the arbitrage. So that would be a tip that people can look into. And if it's right for your business, it's a great opportunity.
Love it. Great stuff. I've got like a checklist of things I want to talk to you about offline, but for the purpose of this podcast, so before I go to my final question, where can people find out more about you and your businesses and anything else you want to share?
Yeah, so got a lot of videos on YouTube that are just, free training if you're interested in doing deals. I've got a book called The Ace Formula that is on Amazon. I got it updated. It's over a decade old, but still applies to today. I do have a Patreon that has over 200 videos where I get into, like you said, I can't talk about all the deals, but we just get into the nitty gritty. That's patreon.com/Ace Chapman. And I'm Ace Chapman everywhere online.
Love it, Ace. So my final question on the podcast is always about my highest value in life, which is freedom. And for me, that means everything from freedom, again, from oppression for all people in the world, to why I've been an entrepreneur. I haven't had a boss in decades. What does freedom mean to you, and how does it impact your life and business?
So for me, as you know, I've spent the last decade, I spent my 20s in a very intense hustle mode. I got to the point where I was 29, where I was getting hives, and I go to the doctor about the hives, and he does some tests. I come back a week later. I'm like, yeah, like I need some kind of cream to get, I can't go to these meetings and stuff. I got these hives on my face, man. I need some kind of cream. He's like, there's nothing that's going to get rid of it. I'm like, okay, well, what do I need to do? He's like, you got to take a vacation. It's just stress. You've got to, relax and take a vacation. And like having the doctor prescribe a vacation and then going on a vacation with the girl I was dating and her like, dude, you're working just as much. Like you have an issue. And so that going from that in like my 20s into really purposefully designing my life. And that was that was actually this paradox where I realized I am like, I'm designing my life around my business. I need to really like be trying to figure out how can I, design my life first and how my businesses fit in around that. And so I literally just sold everything, started from scratch, and then was more purposeful in how I do deals, how I filter them. And that is a filter, like literally a due diligence. You're asking about managing and all that. A due diligence filter of the deals, like how much of a headache is this going to be for me? How much of a load, like is anything going to fall back on me? And the idea is that there's 0% that falls back on me. So I'm structuring a deal and getting other people involved and giving them pieces. And I'm readily like, I am greedy for freedom. I'm greedy for my time. I am not greedy. I will share the wealth. I'll share the equity. Like let's all win together. And so that's kind of where I come from freedom. I'm greedy with the freedom of my time and location. So I was anchored down at that point with a lot of these businesses. And so that's another filter. It's like, as you know, one of my partners, Noah, and I, we took a company public, and part of it was like, hey, like, are you going to be living overseas? And it was like, you really should be like in the US. And, I told him, I was like, if that's a part of the deal, then we just won't go public. This isn't going to work because that is a filter for me. So I think that's important. As you're doing these things, like a part of your due diligence, a part of your filtering should be, does this fit into the lifestyle that I want to design for myself?
Love that. Ace Chapman, thank you so much for being a great guest on the DealQuest podcast.
Thanks for having me.
Thank you for joining me on this episode of DealQuest, where we help you understand how deal-driven growth can be your ticket to freedom. I want to invite you to a unique way to tap into the wisdom and experience of the DealQuest community. Join the DealQuest Deal Den Zoom calls, a free monthly 90-minute mastermind. In the mastermind, we address all the challenges you may be facing and help support you with the opportunities that may arise in terms of deal-driven growth. You will get input not only from me, but all the members on the call will collaborate and serve each other in a mastermind format. To sign up for the free mastermind, go to www.corykupfer.com/dealden. That's CoreyKupfer.com/DealDen. I'll see you there. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your Deal Quest will bring.